20 out of like 50 or so people. Most of the grades were over 70 or above, and so that means that you know what you're doing. Like I said, the homework shows me that you know what you're doing, and then you went and did it on the exam, so that's great. Now we're going to continue that same conversation. All we're going to do from this point is to add on to what we have, which means we'll still kind of start the same way, just to lock it in your head. For today, I'm going to go ahead and do that, but before I start that, one thing I want to say is, we've always talked about what we're doing. Now we're going to just put some journal entries with it. That's it. As you've seen with all of accounting, you know this stuff, right? It's just a matter of talking in the right language. So I'll just go ahead and do it, give you a break, right? And I'll write up here. You can feel free to join in if you like to, but I'll just go ahead and write the balance sheet, which is our assets. It's going to have, we're also going to have liabilities. And we're going to have equity. And we know that assets equals liabilities plus equity. Now, we're going to have our current assets, which is going to be our famous acronym there with the D. We're going to have our long-term assets. The only thing we're going to do from this point, especially when you get to chapters, anything after chapter 5, we're just going to be adding on. Chapters 6, 7, 8, and 9, all of those will be adding accounts over here pretty much. Obviously, there's going to be some more, but in general, all we're going to do is to add here. So understand that anything that increases the assets accounts is a debit. Understand that anything that decreases it is a credit. You got that, and so I expect you to get even more of those. When we get to chapter 10, 11, we're going to be mostly over here. Not to say that we don't have anything working here, but mostly we're going to be over here with our liabilities and equity. So that's all we have. Now, we've always talked about the order of the income statement, or the order of the financial statements. We have our first one, which is our, I'll start over here because of why, but remember, this is the first one actually. We always have our income statement, which is our revenues minus expenses, right? That's usually our first one, and it's still going to be our first. And then we have our second one, which is a statement of retained earnings. And then we always show that it goes to the balance sheet. So all we really have to do for the first part of chapter 4 is, you know this, we're just going to see how do we make accounting out of it, how do we put the journal entries in. It's going to follow the same exact concept that we've done. So let's go ahead and get started on that. We know that our income consists of what? Our income statement consists of revenues and expenses, right? I want us to think for a second. When we had expenses, if we had rent expense, if we had salaries expense, how do we increase our expenses? Using a debit or a credit? Almost. I think I know, you probably think about paying it, but what we did, we put our journal entry for expenses, we debited blank expense, and then we probably paid the cash. Or sometimes that expense, if it's salaries expense, salaries payable, that may have been why you thought that. That's little stuff. You see what I'm saying? So that, I'm not worried about that. You're gonna get that easily because you already knew the answer. So that's easy, right? What about revenues? If we debit expenses to increase them, how do we increase our revenues with a what? With a credit. There you go. So let's think about it. We're moving our income to the statement of retained earnings, which is back over here. So you might as well say we're moving our income to our retained earnings. When I move my income to retained earnings, all of this, I am, let's use this term, zeroing out everything, right? So to zero out means to make it the opposite. If I add, what's the opposite of add? Subtract. If I multiply, I divide. Since I debited everything, I thought this was going to be a great marker. I thought that was going to be a great marker. I'm not going to say it all day. There we go. Since we increase expenses with a debit, we remove them with the what? We increase it with a debit, we remove it with the what? The opposite. With the credit. There you go. Since I increase revenues with a credit, then I remove them with a what? With the debit. Everybody agree? Okay. Now, we've taken care of we've taken care of moving revenues. We've taken care of moving expenses. Now we have income. What do we do with that account? There's always going to be a difference. More than likely, it's always going to be a difference, right? So instead of saying we're going to move income, we're going to use an account called income summary, which is going to be the difference between those two. So if you have more debits than credits, then where will your income where will your income summary account go? Over here, right? If I have more credits than debits, I'm going to have income summary for that balance. So it just fits in to wherever you go. Which means it's basically just, as you see, we only using a 4-function calculator. So just make sure that we calculate that or compute it the way we need to, and we can't do anything but write on that. Okay. So everybody feel good about that? Any questions? Let's start looking at it. Let's start looking at it here. Small example. Now we're going to come back and do a little bit more, but let's just look at this part right here. We have an income statement. The income statement for this company here for the month ended, and we can have revenues, income statements at the end of a month. You can make them whenever you want to. Generally speaking, we're going to have them monthly, and we're going to have them at the end of the year. That shows service revenue of $19,520. Service revenue of $19,520. Okay. Knowing revenue, when we recorded this revenue, did we debit or credit the revenue to set it up? Did we debit or credit our revenue to set it up? Which one did we do? Everybody say debit, raise your hand. Everybody say credit, raise your hand. That's right, we credit it. So we already know in order to take it off, we're going to credit it, right? We also had salaries and expense and all these expenses, maintenance and repairs expense, income tax expense. And how do we put those on the books? We put them on the books with a debit. Nod your head for a debit. What about for a credit? No. Okay, so we know that we put them on with a debit, we take them off with a credit. And the only thing we have now is to do what? We have an opening balance of retained earnings and some dividends. Let's focus first of all on the income, on that portion where we remove these, okay? These are what we call our closing entries. Our closing entries. If you remember, we had our income and we had all of our expenses together, right? We will see a list of expenses, then you kind of see a little bit of total over here, right? Well, that total is what we're going to move off of the income statement and put it into the revenues, into the income statement, okay? So how do we do that? We will credit our expenses. I'm going to put a credit there, okay? We're going to credit expenses, and then we're going to come down here and we're going to, and by the way, we're going to do each of these individually. Sometimes you may have a big group, but we do have some that are individual, okay? So understand that there may be times you'll have a group of them. There may be times when you have individual. This one has actual individuals, okay? So either way, if it's total expenses, do it. If there's enough blanks for each individual one, that's probably going to tell you that you need to do it that way, okay? So we have our expenses right here, right? We're also going to close that in just a second to what? We know that revenues minus expenses is income. And so, like I said, we just took care of that, but we don't use the word income. We use an account called income summary. So I took my expenses off of the credit. We agree with that because we set them up opposite. I'm going to simply close it to income summary. And that's going to be with the debit. Okay, so income summary and expenses. Now we've taken care of all of our expenses. We got our expenses off of the income statement. Because the goal is to put them where? In retained earnings and then put it in equity. That's our goal, right? So we've taken it off of the books. Is everybody okay with that? Nod your heads if you're okay with that. Okay. All right. Now, we have to take care of revenues. I probably should have done revenues first, but I don't know why I like to do expenses to get them out the way. Revenues. We increased our expenses with a credit. So to get those revenues off, we need to take them off with a debit. So this time we're going to debit my revenues. Let me draw my piece of paper right here so we'll know we're all the way over there to the side. We're going to debit our revenues, and we're going to also put those in income summary because look, I'm taking my whole income statement. I have the income statement over here. I'm taking my whole income statement and I'm putting it in retained earnings. So if I'm putting my income statement in retained earnings, by the way, don't pay attention to this right here. This is all declaration there. If I'm putting my income statement in retained earnings, then I know that I'm going to decrease my revenues with a debit. And now I've taken care of this right here. Remember, this equals income summary. So the account that I will use here will be now a credit to income summary. Everybody okay with that? Y'all see pretty good over there? So we took care of the income statement. We good. Now we need to do what with the income statement? What do we always say? We put the income statement, we close the income statement from what? From the income statement to what account or to what statement? The statement of what? Which one? Cash flows. Almost. Cash flows is the one we don't do. But remember, we had our income statement that closes to our retained earnings. So now, think about it. This is going to there. Usually we would just write it. But since income now has a new name, it actually has a last name now called income summary now. So income summary is taking the place of this, and now we're going to put this in retained earnings. Let's just say I have $30 here. Let's just say I have $100 here. We see that, number one, think about it now. You had previously, I want you to think about how this was. Previously, we had a bunch of revenues that were credited. So we may have had service revenue. Well, I don't want to go through that. We would have a bunch of revenues that were credited. We took all of them off, so that has a zero balance now because it all went there. Then we have some expenses, but now they're at a zero balance because it's always there. Our income at first was $70. So my income summary, before we even know where we're going to do it, my income summary is going to be for how much? $70, right? We good on that one? Now it's just a matter of, do I debit or credit? Let's see. I have more credits than I have debits. So in order to balance this out, I need to have my income summary on the debit side, right? Sound good? This is one approach. Now, I'm going to do both approaches with the journal entry, but this is what some people may like to hear this, some people may like to hear the other one. But let's just think of it. Like I just said, you have more over here than less over there. So it seems logical to make it balanced that I do what? Debit, right? Everybody agree? All right, so let's debit income summary. Okay, nod your head if you feel good so far. Everybody okay? Okay. Now, that's one way to look at it. The other way to look at it is in terms of retained earnings. Let's think of it this way. We want to have an income. We don't want to have a loss, right? We want to have an income, right? So think about it. If I have an income, then I will add that to retained earnings. Remember, beginning retained earnings plus or add income, less dividends. We want to add it to there. How do we show an increase in retained earnings? Let's go through it. Assets equal liabilities plus equity. We increase equity with a credit. So if anything over here increases, it has an increase with a credit. My retained earnings increases because I have more income, which means what? We're going to increase our retained earnings by debit, by credit. Okay? Does that make just the flow? Does the flow make sense to you there? Okay. So let's go ahead and put retained earnings here for a credit. Well, let's credit retained earnings. So you can look at it, like I said, it's one of two ways. If anytime you have more income, which is what we want, anytime you have more income, you know you're always going to debit. Because when we have more income, because we increase retained earnings, we already know how to do that. So what we could do is say, oh, okay, I got $7, I have $70 income. That's going to increase my retained earnings. I can do this journal entry first. And then just kind of say, okay, well, the other one must go here. Or I can think through it and say, well, I have more credits of income summary than I have debits. So in order to balance it out, then I must put $7 there and $70 here. So that's two ways of thinking about it. Or you can think all three of them together to check your work, check yourself. But does that make sense that you have two different options? Okay. So if you forget one, number one, like I say, income. You have income. I know I'm going to put it in retained earnings. I know retained earnings increases with a credit. So let me write what I know first, and then put the other one over there. Or I can say, well, I know this is a difference, so let me write this one because I know this one, and then the other one must be there. Of course, if there's a loss, we have to switch that, right? That's the only thing we have to worry about. If there's a loss, we have to switch that. So that's your journal entries for closing your income statement to retained earnings, okay? Any questions so far? Everybody good? All right. Now, that's what we have, our income summary, retained earnings. The last thing we have to do is worry about our dividends. Let's think about the dividends for a second. Think about dividends for a second. We're going to remove these here. Are dividends paid out of income or is it paid out of retained earnings? I need to make sure we understand. Are dividends paid out of income? Are they paid out of retained earnings? Retained earnings, that's right. Okay, so they are paid out of retained earnings. Now, we already know that anytime they say they're going to pay dividends, that we're going to do what? If we're going, let me put it this way. Statement of retained earnings. This is what we're used to seeing. Let's write this first, what we're used to seeing. Statement of retained earnings, we have a beginning balance. Okay, and we'll move this so you won't think it's a liability or anything. We have beginning retained earnings. Now remember this, if this is your very first time reporting retained earnings, like the first year, how much have you have? Retained earnings is a collection of all your income you have not distributed, right? So if this is the very first time, your beginning retained earnings would be what? 0. If you previously had a balance, like I think we have right here, if you previously had a balance, then you would do what? You would have to take care of it that way, okay? So, beginning retained earnings. Then we're going to do what? Add our income. Of course, if it's a loss, we would subtract the loss. Now this, you don't have to have both of them here. I'm just saying this is what it will look like. The alternate, it's going to always be one of these right here, okay? Retained earnings increases with the credit, so this increased retained earnings. Then we're going to do what? We're going to pay our dividends, so we have less dividends. So let's make sure we understand. Income increases retained earnings, right? That means it's going to be credited. We saw it over there. We had more income, so we credited retained earnings. If I had a loss, that would subtract, that would decrease my retained earnings, right? So obviously you would debit it to decrease it. Is the payment, is our company, is our payment, our distribution of dividends to our investors from our retained earnings, is that an increase to our retained earnings or is that a decrease to our retained earnings? Which one is it? Which one? It's a decrease. So what do we think we would do? We know that it has an effect of lowering it, right? So the effect of that in journal entry form would be to do what? Debit retained earnings. Think back over here. We increased retained earnings with the credit because we had more income. So in order to decrease it, I just simply do the opposite. I come and write my retained earnings over here on the debit side. And then I pay my dividends and I show the payment with the decrease, with the credit to dividends, okay? And that is our closing interest. That is all of our closing interest, okay? Now, the fact that we're crediting dividends, that reinforces that dividends is not an expense. Because anytime we pay an expense, we do what? Debit the expense, okay? Any questions so far? Can we talk through it for a second? Everybody want to talk through it? You can talk like this, or like this, or like this, okay? We don't have to use words. So, we have our assets equal liabilities plus equity. We previously have shown, and we know this because we just did this on chapter 1. We know that income, when we finish with income, it goes into the statement of retained earnings. And eventually our retained earnings goes into our balance sheet. We agree with that, right? The only thing we have to do right now is to say, look, how do we get it there? You know, if I want to get from here to over there, I know that I got to get there, but I got to walk, drive, or something. So, in order to get there, what I need to do? I need to take my, what I have to do, we can go here. I need to have my revenues in, let me take this off here. This is my income statement. Revenues minus expenses equals income. So, I need to take all of my revenues off of my income statement and put them in retained earnings. It has to have a vehicle to get there, a car. The vehicle is called what? Income summary. Income summary is going to take it to right there, okay? Now, that's just one part. This part of income summary is going to take it right there as well, okay? So, revenues is going to go there by the income summary statement, okay? What else is going to go there? We're also going to take our expenses off of our income statement. So, think about it. When you do these entries, will your income statement have a balance of revenues? Or will it be a zero balance? Who thinks it'll be a zero balance? It'll be a zero balance once it's all gone, right? Once I close this out, once I take this off, I have taken my $30 of revenue, $30, my $70 of revenues. I apologize. I've taken my $100 of revenues and I put them over there with income summary. I put them in the car to put them in the closing account. I took my expenses, $30. I took them, put them in the income summary car, and I put it in there. So that's how it gets there, okay? See this a little bit better here. These are my revenues. It's going to go into the income summary there. That's the car, and then this car here takes the expenses and puts it in the same car. And of course, in order to balance this car out, we have to have them all sit on the same side, because if they're sitting over here, we have to have someone to help balance it out. So that's what we have there, okay? Is everybody okay with that part so far? Now, once we finish this, we put we put everybody in the car, and we have to put it now, drive it over to retained earnings. With the balance, when it has an increase, it's always going to show an increase with the credit. We know that though, because we did general interest last time. And the last thing for us to do, remember, all of this is from the perspective of this is our company. The only thing left for us to do is to now go and to pay the investors. We want to show thanks to the investors. See, sometimes if you invest in something, you may want the stock to go up. We all do, right? But then there are companies that have been around for a long time. They're not really going to grow like that. So what they'll do is they'll show their appreciation by giving you dividends. Usually, if a company starts paying dividends, they kind of can't stop. You know, it's like you start doing something for somebody and they kind of expect you to do it, otherwise they won't be there. Well, the same thing with companies. That's why once they start the dividends, it's not a rule, but it's kind of understood that you keep doing it, okay? So just understand that if you invest in an older company is something like Coke. Coke's been around forever, right? FedEx, they're not, as far as I know, they're not going anywhere. They're probably going to be more likely to pay dividends. Not say their stock can't go up now or go down. Not say it can't happen, but generally speaking, it's going to remain the same, okay? So we have to pay our dividends. We pay our dividends out of retained earnings, not out of the income statement. So to show that we paid it out of retained earnings, that's why I have this debit to retained earnings. So that's why I have that debit there to retained earnings to reflect my dividend payments, and then the dividend is going to go there to take care of that. I put that figure, whatever I have after all of that, I put it right here to have my final or my ending retained earnings, and that is what goes under the balance sheet here. So let's think for a second. When you see a balance sheet, and you see retained earnings, just period. You pick up a set of financial statements right now. If you see retained earnings, is that an ending balance or a beginning balance? What do we think as a result of this? Knowing now that my ending balance is going to be a result of closing out all of my income to income summary, to retained earnings, paying dividends, what's left over is going to be my ending retained earnings, which goes there. Is retained earnings in any balance sheet that if you go pick it up, is usually going to be a beginning balance or an ending balance? Who says beginning? Who says ending? Okay, good job, good job. So it's just one of those things. These are things that say, how do I check to make sure I'm right? You know, if I'm in the end, I'm really confused. Just think, income. If I made income, I'm pouring it in my retained earnings, and I'm continuing to increase it. So that's one way we can check that. Okay. Any questions so far? You want to try this problem? Let's try this problem right fast. We can use the actual numbers here, okay? We can use the actual numbers. Can I erase this? Can I remove this here? All right, so we have an income statement, like we talked about, and we have revenues. Think of it how it looked at first. We actually had we had an income statement, so we had revenues of, how much are those revenues right there? I'm sorry, yeah, I can't see it in the back. How much are those revenues there?
Service is
Yeah.
19,500.
19,500, okay, 19,500. And then we have some expenses. I know, I saw maintenance expense. How much was that one?
This was 2,920.
2,920. And that, when we put these brackets, remember this is saying that we're subtracting from that. And we have, I think it was two more. What are those two types?
Sales and wages.
Salaries and wages. You may see it that way. Of how much?
8,620.
8,620. And what's the other one?
Repairs. Repairs expense.
Preparers.
Repairs.
Repairs. I apologize. Yeah, that's it. Oh, is that it right there?
That goes with maintenance.
Okay, so that is
Income
It's
tax.
income. Why do we have to pay taxes? Because we have income, right? That's it's not a good feeling, but it's a good thing that we have something to actually pay. I didn't say it feels good to give money away for no reason, right? Income tax expense of how much?
1,240.
1,240. So when I add all of it up, how much do I get? Or subtract it, how much do I get?
Total revenue is supposed to be 19,520, by the way.
520.
20.
20, okay, gotcha. Should be 520. Thank you. All right, and so we're going to end up with how much now at the end? 6,740, okay? That's what we have to deal with. Now, just as a preview, when we get to chapter 5, this is going to be a different format, okay? It's going to be a different format, meaning that if you look at any income statement, you'll never see your income taxes all up here because you actually have to figure out what was your income before the taxes and then pay it. Think about it. If you get revenues and start putting your income tax off your revenues, that'll be wrong because you use some of that money in your business. So in chapter 5, we'll do a different structure, but right now we're not worried about that. We're worried about the income statement and how do we get everything in the balance sheet, okay? So now, our goal is to take this and put it where it belongs in the balance sheet, which is in the equity section, okay? So let's see, let's come over here, or maybe here. Let's go here. Can you see my right here? Everybody see okay? All right, so this is what we have. Let's put a little line in between. I need to take my revenues from my income statement and put them in retained earnings. But first, I must take them out of the income statement to zero this out. I increased my revenues. When we recorded revenues previously, we recorded it with a credit. So to erase or to take out anything that previously had a credit, how do we take that out? With a debit. So I will have my revenues. Let's just use these over here since they're already here. With the income side, with the revenues, I previously had 19,000 as a credit. I'm just going to remind us that this is what it previously was, a credit, okay? It previously was a credit. And so now I'm going to debit that, okay, with 19,520. It's going to go into what card? It's going to go into income summary card, right? So this is where it would be. At this point in time, since I have that there, is it safe so I can zero out my revenues? Everybody feel good with that? Because there's nothing else there. I moved it. I took all my credits off the books and I made them debit. So make sure you can see that there. This was a credit, and now it is a debit. So that's a credit, and that is now gone. Now, I believe that it takes every individual one and writes it over there. But for the sake of time, if you can tell me what this is right here, we're going to do it all in one step. So how much is all this together right here? $12,780. $12,780. Remember, sometimes it may ask you for all of them, sometimes it may ask individually. This is all of, I'm doing it as in all of them, but the problem is actually individual, which means you have a little bit of practice now. So, $12,780. Every time I record an expense, I record that expense as a debit. We agree? Journal entry. Always put it on the books with a debit. So if I put it on with a debit, I take it off with a what? With a credit. There we go. So these were previously debits. And now I'm going to take that expense off now with a credit for $12,780, okay? What cars are going? It's going to get the same car as revenues because they came out the same car, right? So you came together, leave together. We're going to put it in here, $12,780. Now they're all going to, by the way, this is now zeroed out. My car, if we want to check this to make sure we did it right, you should be able to get the difference between those two and get 6,740. Can somebody confirm that for me? This is just showing how we can check our work if we ever, get lost or whatever. Just give me a thumbs up if you get it. Okay, all right, good. That's good. So now, this car has new parts to it. And we're going to take all of this and put it in retained earnings. Let's do it both ways just for us, okay? Since I have an income value, does that increase or decrease retained earnings? It increases. We know that we increase retained earnings with a credit, which is why we have a retained earnings credit right here, okay? So this is going to be for the $6,740, okay? Let's think about it from the other side. I have more revenues than expenses. Same thing over there. So in order to get if I have more revenues, that means technically I have more credits, right? So since this is more credits, and since this is the same account, I'm going to debit it to make sure that I can reflect that over here. Debit of $6,740. Get a big head nod if you understand what's going on. Everybody okay? And don't get me wrong now, when you get out and go do it yourself, it may feel a little bit weird, but it's no different than you felt weird at first when you get to the exam. And of course, we'll be able to get through it, so it's not going to be, we're going to do this over and over again to some degree, each time the way we did everything else, okay? we need to do one more thing. We need to thank our investors, right? And we thank our investors by paying them what? Dividends, right? Where's the dividends coming from? Should I have put the dividends over here in my income statement? No. They should always come out of my retained earnings. Do dividends increase or decrease my retained earnings? Decrease it. So to show a decrease, this is why I have this right here debited, okay? So that's going to be, and how much is that? Is the retained earnings for?
24,290.
24,000. They get a lot. $24,290. That's a lot of money, huh? But that actually kind of helps us out a little bit. Let's think about this. I forgot the number, but let's think about this. $24,209. Look how much income I had. So do you think I paid them out of my income right here? I must have had something in that retained earnings balance at first. That's the only way that I can pay that out. If it's in cash, let me say that, if it's in cash, it could be another form of dividend, meaning we can't just give you some more stock, okay? So we can't just give them some more stock. So think about that, but if this is cash, that means I previously had some in there. So everybody good on that part so far? All right, so let's keep going. Wait, that's it. We've done everything that we can do right there. We closed it down, okay? Now, there is one more thing we can do. And that is to actually prepare the statement of retained earnings. Help me set it up right fast. What goes first? What goes first with my statement of retained earnings? What kind? Beginning retained earnings, that's right. Beginning. How much is my beginning retained earnings?
24,290.
24,290, okay? Is that the same as my dividend number right there? Is that the same as for my dividends? How much were my dividends for?
1,600.
600, but let's just say it was though. You see why I'm able to pay that? Let's just say it was. That's the only way I'll be able to pay that, but it should have been what now?
1,600.
1,600? All right, that's the, yeah, okay, 1,600. But you see how that still could have been, okay? We could have afforded to, if that were the case, and I probably asked that question wrong, so that's probably why I got that as I asked that question wrong. If we had paid that, that's how we would have been able to afford it. We would have paid out of this, and we still would have had some left over if that was right. So this is more so how we use those funds, okay? Now, beginning retained earnings, we're going to do what? You're going to make two adjustments. What's the first adjustment? Add income. Add it because it increased it, right? Good deal. And the income was 6,740, right? And we paid, which means we paid our retained earnings. We decreased our retained earnings, so we're going to do what with the dividends? Subtract, or we may say less in our books, the same as subtract. And the dividends were 1,600. And my ending retained earnings balance would be how much? Whatever that number is, that's the ending balance. Anybody got that number for me? Can you see? That's 24,290, and then we're going to add 6,740, and then reduce or decrease it. Subtract 1,600.
29,430.
29,430, and that is my ending retained earnings. That is going in my statement of cash flows, right? It's going to my what? Going back to the income statement, right?
The balance sheet.
The balance sheet, there we go. Under which section? Asset, liability, or equity? Equity. That is an example of our entire closing entry that we did there. And we took a little bit, oh, no, we didn't. We did kind of take a little bit farther. This balance here, 29,430, they just obviously have to do this on the side, but now we have an example of what it looks like when we do it, okay? How does everybody feel about that? The closing entries. So just kind of thinking about, like I say, we've always known assets. I say always because it feels like forever now. We've always known assets equal liabilities plus equity, right? We always know that our assets increase with a debit, our liabilities and credits increase our liabilities and equity increase with a credit. The thing is that we had income and we want to pour our income back to the balance sheet through the retained earnings, but we did not know how to get there. So what we did is we took this income, we put it in a little car, a little tiny box car, not too much, a little tiny box car, and then we put it in a statement of retained earnings with this journal entry, okay? So a couple of them to do what? Zero this out and put it in here. Once we did that, we said, hey, I have my retained earnings balance, but I need to show my thanks. And show my thanks to my investors and pay them dividends out of my retained earnings. That's the journal entry. Once I did all of that, then I knew that I have an ending balance of $29,430 retained earnings. And as a result, I know that this is going to go in the equity section. This increased my equity. And now I've completed that section of the balance sheet basically until we get to the part we talk about doing owner's equity. Any questions? All right.